Meanwhile, the National Bank of Kuwait also reported strong first-half results this week. Net profit rising to 315.3 million dinars. That's $1 billion, up 7.8% compared to the same period last year. Despite the strong showing, NBK's board held back on paying an interim dividend, opting instead to retain profits and build up capital as the bank navigates a more volatile external environment. That includes rate uncertainty, heightened geopolitical risks, and the impact of the new US tariffs impacting the operating landscape for the second half of the year. Let's unpack what's influencing profits and what's in store for the second half. Shaikha Al-Bahar is here. She's live in Kuwait City. She's the Deputy Group CEO at the National Bank of Kuwait. Shaikha, welcome to the program. Always good to see you. First to the numbers here. NBK posting a 7.8% rise in net profit. What is the mood inside the firm on these latest numbers?
Yeah, we basically generally had very strong set of results for the period as the bank recorded, as you mentioned, solid performance on quarterly and semi-annual basis. The net profit, as you mentioned, it's increased by 24% and grew by 7.8 year on year. The second quarter profit were positively impacted by recoveries in provisions and impairments on a healthy mix of year-on-year growth in interest income by 1.5% and solid non-interest income growth of 8.9%. Our net operating income grew by 3.1%. We also achieved a remarkable year-on-year growth in business volumes, reflecting the success of our diversification strategy as growth was recorded in different business segments and from various locations of our network. Year-on-year loan growth reached 12.1% as of June 2025.
Shaikha, let's talk tax as well. How much did the new corporate tax regime eat into your earnings this quarter?
Interesting question. In Kuwait, the government has recently published the executive regulations of the new corporate tax law, indicating its effective implementation in 2025. As NBK Group, as you know, qualifies as a multinational enterprise under the new law, our effective tax rate increased to 16% from 9.2% in the first half of 2024. The impact will reflect on a quarterly reporting throughout this year, but the year-on-year effect will fade beyond 2025.
Fading beyond 2025. Okay, so we'll keep watch on that. The other thing investors are watching here is the dividend. NBK skipping its interim dividend. You've historically rewarded shareholders with regular payouts. So what's changed this time around? What's the strategy behind withholding that dividend?
Yeah, well, NBK has always opted to reward shareholders while also focusing on creating long-term value. The decision to return half-year profits till year-end and focus on end-of-year final dividend distribution is taken based on the growth opportunities that we see in our markets of operations. In addition to the expected pickup in the activity in Kuwait, as you know, Kuwait is going through major mega projects activity, and this will create opportunities for banks, including NBK. So the constraints on interim capital ratios that the distribution maybe will impact will limit our growth prospects throughout the year. Our focus will shift to year-end final dividends distribution, as this is, when we benefit from our internal capital generation and can rebuild our targeted capital buffer.
wanted to shift focus over to the operating environment as well, particularly for the second half of the year. As you know, a lot of geopolitical uncertainty in the region. We've seen this recent conflict between Israel and Iran, but also at the same time, coming out of the United States and the Trump administration, this new push on trade and tariffs, something that President Trump is very clearly focused on. Our region, not immune to that, also subject to a 10% tariff. What does that mean for the firm?
Well, basically, the operating environment in Kuwait is good. The prospects are really very positive, as I mentioned earlier. The business, environment is creating opportunities for us in Kuwait and in other markets. Regarding, the tariffs and tax that the new U.S. administration is implementing and imposing on banks. Well, in GCC, the economic situation is very related and sensitive to volatility in oil market. And luckily, tariffs on oil and gas is not imposed. So short-term instability in oil prices may persist as ongoing downward. Revisions to global economic growth projections. A protected period of lower oil prices can negatively impact the fiscal position of GCC, but you know that most of GCC countries, they have great sovereign funds balances. So this will help a lot, the finance of the large projects requirement and other business opportunities.